Hi everybody, this is Gary Dean and this is our nightly video report for Monday, October 10th, 2016. I'm really sorry about missing last night's video report, but like I said, I had to take a trip and go visit my cousin who's in the hospital. So let's get started. I took a position today, or I sent you guys what I was doing, and the main reason was I've been following this triangle, and on Friday's big dump, that's exactly where it found support. And the bulls are not good at hiding anything, because the only way they get to this descending line here is to gap it up there. And every time they've gapped it up, it's failed and come back down. So the way that I have it labeled is A, B, C, I think it's I'm trying to figure out now, A, B, C, D, and this is going to be the wave E. So once this completes, the way that these patterns typically work is after the wave E comes, we should come down and break the bottom of this support here. Now the way it works is you take the top of this this here, which is at 2180, and I'm just using the base. I mean, we could go low, but I'm just going to use it right here. So 2180, it's about a 36 point drop, but that's from this level here. So 36 points from 2144 is going to bring us right around that 2108 area, which is it's not a bad trade if it gets down there, because it's if I got it here, then the points coming down is going to be close to 60 points, 50, 60 points. If they decide to eliminate this pattern here, my stop's right above here. So I had very limited risk on it, because if I was wrong, it was only going to be 4 points ahead from where I got short. And if it's right, then we're gonna see the S&P trading, all the way down at these levels or maybe lower. So that's really was my reason for it, because it was a pretty measured risk reward, and whether it plays out or not, we'll find out soon enough. But it made sense, and I wanted to get that out to you guys, just so in case you wanted to follow, whether you did or not, it's not a big deal, but I just wanted you guys to see what I'm seeing. Now, the reason why this is important, and if it does follow this pattern, is because if it comes down here, we're then going to break this large bearish rising wedge with bearish divergences, and this was giving us a target, because if it breaks it, it's going to be coming down to like the basin here, so that would be anywhere from the 1956 to the 1890. Now, again, that's a little bit of a bigger picture view, but that's what this pattern is looking for, and that's why it's important that the bulls hold this here if they really want to continue higher. But we have another 30 days into the election, and that's a pretty long time to stay in this little congested range. Most likely it's going to it's going to break out, and I just don't see the participation coming in besides these overnight gap ups that they're doing. I don't see them having the strength to be able to push it through all this resistance, and that's why I'm thinking down. But even if I get stopped out here, then most likely I'm just going to really wait and see up here. The overall where this whole thing is wrong is if you start taking out this high right here. So that's right around that, say, the 2188, and you could even say to 2194, but that's kind of obvious because then we're making new highs. But it's one of those things where until we start taking out some of these important highs, it's me, every bounce that they get which is a gap higher, because that's the only way the bulls can move this tape. I'm going to use it, and I'm going to wait for resistance and short it. And again, if I'm wrong, I'm going to get stopped out here. I'll wait and see when I get another little, the pullback like that, where I can take a short position and then put a stop against the previous highs. Really no bullish or bearish divergences, because we've just been stuck in this neutral, and so nothing really to go on there. And if the bulls push it above this, this trend line here, then they're most likely coming up to the 2175 or up to the 2180, or possibly coming up and even closing the gap at the 2181. So those would be the levels you'll see. I think that the mid pivot right here at the say the 2158. If that gives way, this is going to be the earliest clue that we're taking this low out, because after all these tries are coming up, and like I said, every one of these has been on a 10, 15, 20 point gap higher. That's the only way they've been getting up here. And then they've been just losing everything the minute that they get there. So if we get down to if we start breaking like the mid pivot here, I think all these people that are been buying these gaps are just going to throw in the towel, and we're going to see us start breaking some of these patterns, starting to break to the downside. On a 15-minute chart, I mean, nothing's really changed here. Where we have our support and resistance zones. The bulls are buying in this first support zone, and then they're selling at the first resistance zone. If they get above this, that's when you start eyeing down the second resistance zone. But like I said, I still believe that the break is going to come to the downside. It's just a matter of how they're going to get there, and if they decide that they're going to head up, then it's not really going to change my bearish bias right now, just because, like I said, I do believe heading into the elections, there's just going to be too much uncertainty, and I don't see a lot of people jumping in. And if it happens, then I just what's going to happen is I'm just going to look for the next area to short if it breaks through. But I like the entry. Like I said, if they gap up, then what's going to happen is I'll get stopped out at a pretty limited loss, and that's it. But right now, from the trade that I'm in, I'm just looking at it right now, and let me refresh it. It's on my other screen, but I'm up $420, and that's on just 20 put contracts. So it's not a huge trade, a little 3,600 in that range, but it's I think it could work, and if not, I'm going to get stopped out. But with that, let's see what plays out tomorrow. You can see we didn't have any bearish divergences here. If we do get a pop higher, these are going to be the bearish divergences. Remember, this is how it's happened a lot, where we come up, gap up, and then chop around and then collapse. Gap up, chop around, collapse, gap up, just kind of melt it up a little bit, then collapse. So we may get up there. You may want to loosen your stop a little bit. It's totally up to you. But any push above these levels here, we're going to have some bearish divergences, and I think things are going to set up pretty nicely for a short side trade. So with that, enjoy the rest of your night, and I'll talk to you guys tomorrow.